Greetings, Critical learners. My name is Mr. Simbi, and welcome to today's accounting lesson. This lesson is brought to you by the Gauteng Department of Education in collaboration with Sabono Discovery Center. As the days of the examination are now just around the corner, we are almost through with preparation for the exams that are about to start. And I know that you guys have been studying, and I want to encourage you to keep on studying. In today's session, I'm going to be looking at your cash flow statement, and I'm also going to be looking at financial indicators. So I have a couple of activities that I want us to do together, and these will include calculations. They will include also looking at information and critically seeing things that may be hidden within the information. For today's class, I want to encourage you to have your calculator. You need to have a calculator. You need to have a paper so that you can be able to write. You also need to have a pen so that we engage with each other. I'm going to try to be as slow as possible so that you can benefit from today's class. So if you have a problem with the cash flow statement or the notes to the cash flow statement, today we are going to address all those challenges. Remember, you need to have your calculator, your pen, as well as the paper. Now, for you to answer cash flow statement questions, you need to know the format of the cash flow statement. At times, the examiner does not bring us the full cash flow statement, but nonetheless, in today's class, we're going to look at the full cash flow statement, such that if the examiner brings the full cash flow statement, we are covered. If the examiner decides to bring certain parts of the cash flow statement, we will still be covered. So your cash flow statement, remember, it is split into three main segments. The first part is your cash effects from operating activities. That is what you see over here, your cash flow from operating activities. And then after that, you have your cash effects from investing activities, and lastly, cash effects from financing activities. It is very important that when you do the cash flow statement, you record outflows as they must be. That is, you need to put brackets wherever there are cash outflows. And when it's cash inflows, then you don't put brackets. If you struggle with that, today I'm going to show you how to do certain calculations and be able to interpret if it is a cash inflow or a cash outflow. One of the most interesting parts of the cash flow statement that the examiner loves so much, it is your net change in cash and cash equivalents. So you will see that in today's class, I'm going to do that part as well. We're going to have several activities, as I've said. We're going to look at our own Gauteng prelim paper. We're going to look at the Free State paper, the Eastern Cape paper. We'll also touch the Limpopo paper. So I'm going to look at about 4 papers, and we see how they are asking these questions so that we prepare adequately for the exam that is just around the corner. All right. So to begin with, we're going to start with the Free State 2023 prelim paper. What they did in their prelim paper, they brought in their cash flow question, and it reads, Free State Suppliers Limited. You are provided with information relating to Free State Suppliers Limited for the year ended 20th February 2023. Then they say, complete the following note to the cash flow statement. All right, so as we're preparing for the exam, you need to know this note to the cash flow statement. We are talking about the reconciliation between profit before tax and the cash generated from operations. I want to encourage you that as I'm writing, you'll be writing as well. When I explain something, please make sure that you take it down so that it helps you to understand the calculations that we will be doing today. All right, so to begin this particular activity, which is our activity 1 for today, as I said, I have a couple of activities for you. So make sure that you follow them nicely and slowly such that you can seriously benefit from today's class. It says, the extract from the Statement of Comprehensive Income for the year ended 28 February 2023. One of the most important things in accounting is to know your format. You need to know the format of this particular note by your head. That is, before you even go to the exam, you have to know this format. It has to be in your fingertips, that when you are given information, you know where to write that information. So what we have here is the answer book which was provided. And remember, we're doing the reconciliation between profit before tax. So what I need to begin with is my profit before tax. And I'll get that information from the extract of the statement of comprehensive income, which is what I have here. So I'll need my net profit before tax, which is given here. That is your 2.4 million. So I'll come here and I'll say my profit before tax. I'm going to come and write it here. That is your 2,400,000. All right. I hope that you're writing. As I'm writing, you must also be writing so that you follow through what I am doing. So what I've done now, I have written down the profit before tax. That means in the exam, if the examiner gives you the net profit after tax, you have to add the income tax back so that you get your net profit before tax. But then again, the examiner can give you the income tax and then they give you the percentage and the income tax amount. You must still calculate going back to the profit before tax, which in most cases is always 100%. All right. And then after the profit before tax, I'll come to adjustments in respect of. And the first aspect that I'll speak to is depreciation. All right. So I'll come again to my extract of the statement of comprehensive income. Do I see depreciation? Yes. Can you see it over there? That is 185,700. I'm going to take that one. Then I'm going to come and say depreciation. I'm going to come and record my 185,700. All right. Do you see what I've done? I've simply taken the depreciation from the statement of comprehensive income and I've brought it here. That is my 185,700. So far we are good. All right. Let's go on to the next aspect and then we see what more can we record. All right. So far we have recorded our profit before tax. You remember this one. We've also recorded our depreciation. Therefore, the next aspect to record is my interest expense. And I'll come again. Where do I go? Yes, we come to the statement of comprehensive income. In the statement of comprehensive income, what are we looking for in this case? We are looking for the interest on loan. And then when we come down here, you can see I'm not writing it as interest on loan. I'm bringing my interest expense. And my interest expense, remember, is still the same amount though. Then I'm bringing my 175,000. So on my adjustments, remember, only two aspects come to the adjustments. That is the depreciation and the interest expense. So now that I have these two aspects, I now know that I can now move on to my next part, which has to do with changes in working capital. But before I do that, I need to now complete this part. So I had my profit before tax, which is 2.4. I also added my depreciation. Remember, we are adding here. So I'm coming to add my depreciation. I'm also adding my interest expense. And then when I add all of this, it will give me now my operating profit before changes in working capital. So make sure you have your calculator close to you, and I'm going to give you figures to start adding now. Let's begin. We're going to add our 2.4 million plus 185,700 plus 175,000. When I've added this, I want you to tell me on your calculator how much do you see. I'm going to read out the figures again. It's a 2.4 million profit before tax plus the depreciation plus the interest expense. The total will be 2,760,700. All right. Are we agreeing? Thank you. So that means we have the same figure. Now we can move on to the next aspect. The next aspect then is the changes in working capital. So far we are having our amount that we have already calculated up there. So what I did already, I have already put in this amount for you, and you're going to see how we're going to come to that amount. That amount comes from the changes in working capital, which I'm going to do now. So do not focus on this one. I'm going to show you how we get to that amount. When we come to the changes in working capital, there are three aspects that we'll look at when we're in the changes in working capital. Number one, it is your inventory. Number two, it is your trade and other receivables. And then number three, it is your trade and other payables. You're very correct. So we're looking at three things, and we're going to be looking at either an increase or a decrease. You have to understand, what does an increase mean and what does a decrease mean? All right. So I left a blank space for you here so that you can help me to see whether we have an increase or a decrease. So we come and we look at our inventory. In 2022, the inventory amount was 1,281,500, and in 2023, the inventory amount is 1,350,000. What I want to make emphasis is, when the examiner brings these questions, we should be able to read from the right going towards your left hand. That means we should be able to see we're coming from 2022 going to 2023. Not the other way around, but we're starting from 2022 going on to 2023. So what do we see here? You can see that in 2022 we had 1,281,000, but in 2023 it is now more, because we have 1,350,000. What does that mean then? That means we are having an increase. So that means we're coming here, we're saying we have an increase in inventory. All right. Now, how do we know it is an increase in inventory? We are coming to say initially we had 1,281,500, but now we have 1,350,000. Therefore, we are having an increase. Please have your calculators ready. I want you to punch in your calculator and say 1,281,500 minus 1,350,000. How much do you get? All right, thank you. Someone says I'm getting a negative 68,500. All right, I deliberately arranged these figures this way. I wanted you to understand that when you are working with inventory, there is an easy way of doing this, whereby you simply say inventory is an asset. So I want us to devise a formula together right now, that when we are looking at our assets, and inventory is part of them, if we want to know whether it's an inflow or an outflow, we can simply say the previous year's amount minus the current year. That therefore means 2022 becomes the previous year. Then 2023 becomes my current year. And therefore, I'll come here, then I'll say my assets, inventory. So I'll say my previous year was 1,281,500 minus my current year's amount, which is 1,350,000. Whatever figure the calculator gives me becomes the right figure, but I have to take it with its sign. This is more or less the calculator method. And you can see here that an increase in inventory becomes a cash outflow. An increase in inventory becomes a cash outflow. But if it was a decrease in inventory, it means we are selling. Therefore, we have a cash inflow. If inventory is decreasing, it means we're selling the inventory. Therefore, cash is coming in. It would have been a cash inflow. But in this case, inventory is increasing. That simply means we're having a cash outflow. And I tried to make a formula with you just now, whereby we say, when we come to our assets, whereby inventory is part of the assets, we'll say the previous year, which is the 2022. So I'll come here, then I say previous minus current. So I take the 2022 figure minus the 2023 figure. Remember, we are trying to calculate to come to this one. All right. So number one, we have our inventory, which we have already found. An increase in inventory, a cash outflow. But if it was a decrease, it would have been a cash inflow. All right. Can I move on to the next aspect? Thank you. All right. Let's see the next aspect. All right, so in the next aspect, remember we are in the Free State 2023 prelim paper. We're in the Free State 2023 prelim paper. Now, when we come now to the next aspect, which is your trade and other receivables, you will then find that in this statement of financial position, we just had totals, but the note is then broken further down, whereby you see we have net trade debtors, we have accrued income, then we have SARS income tax. When we are doing this note, we will not be looking at the SARS income tax. So we will not use the 1,530,000, but we will only use the 1,420,000 as well as the 35,000. That will apply for the year 2022 as well as 2023. All right, let's see if we can write these amounts down. All right, so when we come here now, we are now saying, what do we see in our trade and other receivables? Do we see an increase or do we see a decrease? Okay, so to begin with, we need to add some particular figures. So if we are I'm going to use this top part here. And then we say, in 2022, have your calculator closed now? In 2022, we have 1,430,000, and then we're going to say 1,430,000 plus the 35,000. So it's going to be 1,420,000 here plus the 35,000. That gives us 1,455,000. Thank you. All right, so I see most of you are calculating. So you added the 1,420,000 plus the 35,000, which gave us 1,455,000. Let's come to 2023. Let's see how much we get here then. In 2023, we're saying 1 million, bring that calculator close, 1,554,000. Then you say plus 26,000. Can I say it again? 1,554,000, which is your net trade debtors. Then you add accrued income of 26,000. Once you add these ones, how much do you see on your calculator? Please give me the figure. All right, so you get 1,580,000. Thank you. All right, so in 2022, we've added certain figures. We got 1,455,000. In 2023, we had 1,580,000. So we want to see now, do we have an increase or a decrease? What do you see? In 2022, we have that. In 2023, we have that. Is it an increase or a decrease? Definitely it is an increase. So you come here and you are saying we have an increase in trade and other receivables. Now remember the formula that we started with inventory. And we agreed we're doing that because inventory is an asset. And trade and other receivables are also assets. Nice one. So that means if we are to use the same method that we used, we will now say, what do we say? Previous minus current. Thank you. So we say previous minus current. So let's start with our previous then. With our previous, how did we get the previous amount? I'm going to come here and we got the previous amount being 1,420,000, and then remember we added the 35,000, and then we close that bracket, which gives us the 1,450,000 here. Remember that. Then we come and say that amount minus, then I open again another bracket where I say 1,554,000 plus the 26,000. And remember, so what I'm doing, I'm repeating what we did up here, and that will give me 1,580,000. So if I then say this amount, the total of that amount in the bracket, which is 1,455,000. Yes. Then I say minus, because we're saying previous minus current, minus the 1,554,000 plus the 26. Remember how much it gives us? It gives us the 1,580,000. That will give you an amount. When you punch it in the calculator, how much do we get? You get 125,000. I want you to tell me, is it a positive or a negative? On your calculator, there should be a minus sign in front of the figure. Do you see that minus sign? That means it's a cash outflow. Once you see that minus sign in your figure, that means it's a cash outflow. But if we were to say this, if our trade and other receivables are increasing, it is considered a cash outflow. An increase in trade and other receivables is a cash outflow, because when trade and other receivables are decreasing, it means our debtors are paying. When debtors are paying, cash is coming in. So a decrease, on the other hand, would have been a cash inflow. If we had a decrease in trade and other receivables, it would have been a cash inflow. But in this case, it was an increase and a cash outflow. Remember the quickest way that we said, previous minus current. If you were to do it much more faster, you were going to say 1,455,000 minus your 1,580,000, which is just a summary of what I have done here. But I'd encourage you that you show it this way, such that you can show whoever is marking your paper that this is how I got my figures. Remember, all calculations must be done on the answer book, even on the side of your tables where you fill in your information. All calculations must be done in the answer book. I want to encourage you. All right, so far we have done two parts. We have done the inventory, we have done the trade and other receivables. What is the third part missing now? Yes, it is your trade and other payables. All right, so remember, we are trying to calculate to come to this figure here. You're going to see how we come to that figure. So first, we are done with our inventory, and we are also done with trade and other receivables. Let's come to trade and other payables. When you use the amount that was in the extract of the statement of financial position, that would be wrong, because the amounts that were there are these amounts. That is your 1,786,000 and your 1,598,000. The reason why I'm saying these figures are wrong, it is because they include your trade creditors, but as well as shareholders for dividends and income tax. Do we look at the increase or decrease in shareholders for dividends in SARS income tax? The answer is a no. So that therefore means I do not need these figures. I do not need this figure. I don't need that figure. So I'm going to look at only the trade creditors, which is 1,586,000, and the 1,347,000. Those are the two figures that I'm going to be looking at, whether we have an increase or a decrease. So I'm going to give you 1 second, all right? I want you to look at this. If you look at the 2022 figures, which is this one, the 2022, and you look at the 2023 figures, what do you see? Do you see an increase or do you see a decrease? If you look at the 2022 figures compared to the 2023 figures, do you see an increase or a decrease? You can see here it's 1,586,000 and here it's 1,347,000. What do you see? It has gone down, isn't it? Once it goes down, what do we call it? A decrease. So that means I'm coming here to say we have a decrease in trade and other payables. Remember with the first two, we had that calculator method, and we said once it's assets, it is, once it's assets, what did I say? Once it is assets, it is previous minus current. So now we are coming here, whereby it is now a liability. Since it is now a liability, what do we then say? What would be the formula? It would be your current minus previous. It would be your current minus previous. because now we are dealing with a liability. Your current minus your previous. So let's come here and see if we do that. So I'm going to open a bracket here and I'm going to say, which one is my current? The current here is 2023. That means I'm going to take the 1,347,000. Are you following? All right, thank you. So I have my 1,347,000. What else do I say? Minus the previous year. How much was the previous year? 1,586,000. So I'm coming here to say 1,586,000. Let's have our calculators close. All right, let's entering the figures. 1,347,000 minus 1,586,000. How much do you get? All right, thank you. Someone is saying, Mr. Simbi, I have 239,000. Now, I'm going to ask you this question again. If you just say 239,000, is that correct? No, because on your calculator, what do you see? You see a minus sign. A minus sign simply means I must put brackets. So therefore, if my trade and other payables, the individuals or the businesses that I owe, when they are decreasing, what does that mean? It means I'm paying them. If I'm paying them, what is happening to my cash? My cash is going out. It's a cash outflow. So a decrease in trade and other payables is a cash outflow. Hence you see it in brackets over here. But if it was an increase, then it was going to be opposite. It would have been a cash inflow. An increase in trade and other payables would have been a cash inflow. All right, so now we are at this point whereby we now have our three aspects. Okay, so we now can be able to punch these figures in the calculator. Let's do it nicely and then we see how we get to that figure. So I want you to have your calculator. Then you're going to say 68 is a negative, punch it as minus 68.5 minus 125,000 minus 239,000. That is how we get our minus 432,500. That is how we get that figure. Once we get that figure, then remember we are starting from the top here and we are going all the way down. So we had our operating profit before changes in working capital, and then now we also did this section where we had a negative 432,500. And now we can complete it, whereby we can now have our calculators and we then say, please have a calculator, then let's start punching in some figures. We're going to say your 2.4 million plus 185,700, okay, plus 175,000. Remember, it gave us our 2,760,700. Okay, I'm going to repeat that one again. It was 2,760,000 and then 700. Here it has to be our 700. After you have done that, then you now say minus the 432,500, which is what we have there, the 432,500. Once you do that, then you are now going to get your total, which is 2,328,200. Then you end up with 2,328,200. This becomes the final amount on your note. That becomes the cash generated from operations. And do you know where we're going to take this figure? We're going to take this figure now to the cash flow statement. Okay, so we are now going to go and look at the cash flow statement. Remember, you need to practice more of these questions before you can go and write your final exam. So let's now go and look at our cash flow statement. When you look at our cash flow statement, we're going to be focusing on the Limpopo prelim paper for the year 2023. In this paper, they require that you do a full cash flow statement. So that is why we chose this particular question, where we can do an entire cash flow statement. So let's begin. Remember what I said at the beginning of today's class, that when you do a cash flow statement, you have to know the format. And it is your operating, your investing, and then your financing activities. The question reads, Blade Marinate Limited, remember, we're in the Limpopo prelim now. Blade Marinate Limited, the information relates to the financial year ended 20th February 2023. And then we're required to complete the cash flow statement for the year ended 20th February 2023. Okay. And then the first part that we're given, it is the extract from the statement of comprehensive income. So remember, the first part of the cash flow statement is the cash flow from operating activities. So this is what we want to calculate over here, where you see the question mark. And then the cash generated from operations was given, and it is 1,685,500. Do you know how to get this amount? Yes, we have just done that note. You remember the note that we've just finished? That is how you get this amount over there. I now know that everything that comes into the cash flow from operating activities, apart from the cash generated from operations, must be in brackets. In other words, it's a cash outflow. So as I start with my interest paid, before I even do anything, I'm just going to put it in brackets. I know once it says paid, it is going to be a cash outflow. So how much is my interest paid in this case? Where are we supposed to look? We look in the extract from the statement of comprehensive income. Do we have interest expense? The very same interest expense, 91,500, is what I then bring down here. So already I've put in my brackets, so I'm just going to come, then I'm going to say 91,500. That becomes my interest paid. After I've recorded my interest paid, what do you think becomes the next part? The next part is going to be taxation paid. So I know I'm going to come, and here I'm going to do my taxation paid. I'm going to do my taxation paid. Let's go and look for information that has to do with taxation paid. All right, here's the information. We are given here net profit before tax, and the net profit before tax is 1,586,000. And then we're given taxation, 30% of the net profit. But for us, therefore, to get the taxation, what do? We simply come here, and we're now going to say what we are given is before tax. Remember, net profit before tax is your 100%. So I'm coming here to say this amount is the 100%. What is it that I want? In this case, I want the 30, but I have 100, and the 100 is equal to 1,586,000. So if I punch this in my calculator, how much do I then get? I end up with 475,000. The 475,000 becomes my income tax. So when I come here, I now know my taxation is 475,000. 475,000. Then I can calculate the amount of tax paid. To make it easy, I'm going to do a ledger account. I know there's several ways that we could have done this, but due to time constraints, I'm just going to show you one method, which is the ledger account. And to start the ledger account off with, we have a T account here, and I'm just going to call it the tax account, okay? Call it a tax account. So I'm going to come and look at my statement of financial position. At the beginning of the year, what balance were we having? You see here, we had a credit balance. That means we were owing SARS. The moment it is credit, it means it is a liability. So we were owing SARS 34,000. So I'm going to come here and I'm going to say my balance at the beginning was 34,000. Are you following me? All right, thank you. So you're coming to a tax account, and here they said credit, so you know your ledger account. You come to the credit side of the ledger account, balance BD. And then the next thing that you're going to do is to record your income tax. Remember, your income tax In this case, we'll come to the credit side. So I'm going to come here and say my income tax, how much is it? We have already calculated it. Do you still remember how much it was? Thank you. It is 475,000. So I'll come here and say my income tax is 475,000. Once I have this, then I now need to know, at the end of the year, what was the situation? We find that at the end of the year, we have a debit balance. I want to ask you now, at the beginning of the year, it was a credit balance, and we said it was a liability. That meant we owed SARS. But at the end of this year, we are now being told that the balance is no longer credit. The balance is now debit. So is it still a liability? No, it cannot be. What is it now? It becomes an asset. That means at the end of this year, we have a debit balance. That means it is an asset. That means when I come to my ledger account, remember, in the ledger account, you have that part where you have the double lines. The balance at the end of the year is not credit anymore. Rather, it is now debit. That means it comes down here, whereby I now have a BD, which is 9,000. Because in this part, SARS now owes us. So we have a balance BD on the debit side. But for it to be BD on the debit side, it has to be CD up here. That is 9,000. Did you see that part? I'm going to repeat it again. Okay, here it comes. At the beginning of the year, the balance was credit. We agreed. There it is. But at the end of the year, the balance is debit. What does that mean? It means we're going to put it on the debit side. So we come here. Remember, all the amounts that are in the statement of financial position, these are your balance BDs. So I bring my balance BD here, the 9,000. So if it's BD here, 9,000, at the top here, it will be what? CD. So I then close up this whole thing. And what I'm going to look for is what was paid, which is the bank. Do you have your calculators? Okay, I see some of you have them already. Let's begin to add. You will say 34,000 plus 475,000 plus 9,000. I'm going to read the figures out again. Let's go. It's 34,000 plus the 475 plus the 9,000. How much is the total? All right, can you say it again? You have 518,800. So you have 518,800. That therefore means that is what becomes my bank here. 518,800. This becomes the tax that was paid. Now, I am going to record this amount now in my cash flow statement. Remember, I'm coming here to say paid. I know automatically, before I even get whatever amount, it has to be in brackets. Why? Because it is paid. So I'm coming here now to say, I want to show the examiner that I know what I was doing. At the beginning, we were owing 34,000. So I'm bringing my 34,000 here. So whatever we're owing, that means it was what? Paid. And then we have income tax that we should pay, which is 475,000. And we have paid more such that at the end of the year, SARS now owes us plus 9,000. How much in total did we pay to SARS? We ended up paying 518,800. All right, 518,800. This is what we ended up paying over to SARS. Okay, 518,000. Oh, it's just 518,800. All right, so we ended up paying to SARS 518,800. All right, so that is what we ended up paying over to SARS. All right, can I move on to the next aspect? Let's move on to the next part of this question. The next part is going to be your dividends paid. Let's go and do the dividends paid. The dividends paid. The dividends paid. On the dividends paid, we are now saying in this calculation, we want to know how much was the dividends that was paid over to SARS. All right. And then we would then say the last year's final plus this year's interim. The last year's final plus this year's interim. This becomes the shortest way to get your dividends paid, whereby you take the last year's final. How much was the last year's final? We can get the last year's final, which is your 115,300. So last year's final was 115,300 plus this is interim. But to make it easy for us, you would find that in this particular question, they told us already that dividends paid are that. So I would already come here and put my brackets, and I would get my 277,300, which is my dividends paid. But if that was not given, I would be taking my last year's final plus my this year's interim. And in this case question, they do not want us to struggle that much. So you would just have to add your this year's interim here. But in this particular question, they did not give us the interim amount. Rather, they gave us the dividends paid amount already. So in that case, we were sorted. Okay, so remember, we have already done our interest paid, we've already done our taxation paid, and then we have our dividends paid. All right, so to then complete this part, we are coming now to say the first part was the cash generated from operations. This one, remember, we had this one given, and then we had the interest paid, which we have taken out from the amounts that we given, and then we had the taxation paid. On the taxation paid, you remember the calculation that we did, whereby we had the 34,000 which was owing at the beginning, and then we had the income tax that we calculated, which was 475,800, and then we also had the 9,000. That is how we ended up with 518,800. And then the dividends paid was given as it is over here. So this was just easy. So let's take our calculators, and then we want to see how we can go all the way up now. So on your calculators, you will now say 1,685,500, 1,685,500 minus 91,500 minus 518,800 minus 277,300. Okay, so we are taking this amount, then we subtract these three amounts, and it should give us the cash flow from operating activities, which is your 797,900. 797,900. That becomes your cash flow from operating activities. Now that we have the all, let's go on to the next part, which is the investing activities. On the investing activities, we are given the extract from the statement of comprehensive income, whereby we are having depreciation, and then we have the extract from the statement of financial position, whereby we have our fixed assets amount. We are then told fixed assets. During the year, Blade Marinette Limited purchased a new delivery vehicle, so we have this amount to record under our investing activities. They also sold equipment at carrying value, which is 860,000. So we have two amounts to record in this case. Let's see. Again, there were several ways in which you could have got the amount that is missing, which is the vehicle that was purchased. But I'm just going to use the ledger account again to show you how to get this amount. So if you have a calculator ready and you have somewhere to write, let's begin. We're going to come here and we're going to call this the fixed asset account. But remember, this is at carrying value. And then since it's an asset account, here is my debit, which is a plus, and here is my credit, which is a minus. So at the beginning, we had a balance, which was 2,780,000. This is the fixed assets balance at the beginning. Remember, we are taking them at carrying value. So I'm going to come here and I'm going to say BD, I have my 2,780,000. These are the assets that we have at the beginning. We want to know, did we buy any asset? That is what we want to calculate. But did we have any depreciation during the year? That would mean that our assets decreased in value. So we'd come here and then would have our depreciation, which is 214,000. I'm recording this depreciation because we are recording our assets at carrying value. Hence, you see my depreciation here, 214,000. And then we want to know, did we dispose an asset? Yes, we have disposal here. We sold an asset which had a carrying value of 860,000. So I'm coming here to say disposal 860,000. And then lastly, our assets had a carrying value of 2,981,000 at the end of the year. That simply means we come to that part where we see the double lines. With double lines, asset, debit balance. That means my balance is here. BD, that is going to be your 2,981,000 over there. 2,981,000. That means on top here it becomes carried down. 2,981,000. Are you still following me? All right. So we have these amounts. Let's have our calculators, because what we are calculating for is what we have paid for the new asset that we have acquired in this year. Let's see your calculators. All right. If you're ready, let's begin. We're going to now say 214,000. You're punching 214,000 plus your 860,000 plus your 2,981,000. I'm going to repeat the figures again. 214,000 plus 860 plus 2,981. How much does that give you? Okay, it gives you 4,055,000. 4,055,000. Thank you. You have 4,055,000. Then keep that 4,055,000 on your calculator. Then come and say minus 2,780,000. So that same 4,055,000. Come and then say minus 2,780,000. How much becomes your bank? How much do you get? All right, thank you. Someone is saying I get 1,275,000. Is that what you're getting? All right, thank you. So you also get 1,275,000. So once we get that, now we have two figures here. We have the amount that we have received from selling an asset, which is 860. But we also have the amount of the assets that we have purchased, which is 1,275,000. So we now say fixed assets purchased. Once it's a purchase, we understand it is a cash outflow. So how much is this? You have your 1,275,000. Remember that this calculation is being done in the answer book. All right, it's being done in the answer book, such that whoever marks your paper can come and see how you did your calculation. And then here you have your 1,275,000. Okay, so if you're able, you can also come here and open your brackets, and then you are now showing us the calculations where you have your 214,000 and then you say plus 860,000, and then you also say plus your 2,981,000, and then you lastly say minus the 2,780,000, and then eventually it gives you that 1,275,000. Okay, so we have the fixed assets purchased, and remember, once it's a purchase, it's cash outflow, 1,275,000. Then the next aspect that comes is proceeds from the sale of fixed assets. And we have received 860,000. So we come here, we have our 860,000. This is cash inflow. That simply means no brackets. The next thing that we have in our investing activities is the financial assets, the fixed deposit, whereby we are looking at, did it increase or did it decrease? If it increases, therefore we have invested in the fixed deposit. But if it decreases, therefore we are having proceeds from fixed deposits that have matured, which becomes cash inflow. An increase, cash outflow. A decrease, cash inflow. But in this case, we did not have the fixed deposit. So what we're looking at was just our fixed assets over here. Therefore, would come here and would get the cash flow from investing activities. Do you have your calculators, guys? All right, let me give you the figures to punch. You will start with a minus. You see on the calculator, you go and start with minus. So you say minus 1,275,000 because it's a negative here. So it's a minus 1,275,000 plus 860,000. What does your calculator say? Thank you. Someone is saying, my calculator, Mr. Simbi, is saying minus 415,000. So it has to be negative. And once your calculator tells you minus, you then put brackets to show that it is a cash outflow. Okay, so once we have that, that is where we are now. Then we have a negative 415,000. So far we have done cash flow from operating activities, and we got a positive 797,900, and we also got a cash outflow on cash flow from investing activities, which is 415,000. What's next? Definitely, it is cash flow or cash effects from financing activities. Let's come and see what we find on the financing activities. Remember, when we look at financing, there's two main aspects. Just like when we looked at investing, there's two main aspects. It is your fixed assets and your financial assets, fixed deposit. Two aspects. So when we come to financing activities, there's also two aspects that we look at. Number one, it is your shares. And then the second one, it is your loans. And the shares, we have two aspects, that is your proceeds from issue of shares as well as the repurchase. And your loans will either have when we have received a loan or when we have paid back a loan. Let's begin with the shares. So for it to be easy for you, I want to encourage you, let note number 7 become your solution. Whenever they talk about shares, let note number 7 become your solution. Whatever you've been practicing throughout the year, stick to what you know already. So we're going to quickly open a mini note number 7 here. That is your ordinary share capital note. Okay, let's see what they're saying. So we had 800,000 shares at the beginning. So I'm going to come here. Please, you're writing with me, 800,000. I know in this question they did not want you to do this, but it will help us to get the figures done. So you have your 800,000. Are you following? And then, if you come to ordinary share capital, how much do you see at the beginning? 6.4 million. So that means here you also come and you say 6.4 million. Are you ready? Let's go on to the next one. What does the next one say? Additional shares are issued at 12.50. We don't know how many shares there are, but that should not be an issue for us. So we should quickly come here and say issued at 12.50. What do? I continue. And then I come here, it then says 30,000 shares were repurchased at 36,000 rands above the average price. Very important. Above the average share price. So I'm coming here, and then once there's a repurchase, what do? Thank you. We put brackets already. So I'm coming to say how many shares were repurchased. It is 30,000 shares that were repurchased. And then do we know how much we spent? We still don't know. But we know that we paid 36,000 rands above. That means in your mind, you're already thinking the triangle, whereby the top part is the amount that goes to the cash flow. Remember the bank amount. And here it is your average price, and here it is the difference. Some call it above, the above. So that means I have my 36,000 here. I'm not going to stress myself getting the amount per share. I'm just going to use the 36,000, which I was given. So I have my 36,000 over here. All right, let's continue. Then they say on the 28th of February, we had 870,000 shares. That is at the end of the year. So at the end of the year, I had 870,000 shares there. But that is equal to the 7,395,000. Some of you already know what we must do now. What must we do? We calculate the average price. You're correct. How do we do that? We take which one? The 7 million. Thank you. So we take the 7,395,000 and then we divide it by the number of shares. How many shares? 870,000 shares. What does it give us? It gives us the average price at the end of the year. How much was that? That was your 8 Rand 50. Did you get the same figure? Okay, let's see if we can get the same figure. What do you say? You say your 7,395,000, which is this amount here at the end, divided by 870,000, which is the number of shares at the end. Did you get 8 Rand 50 now? Okay, now let's continue. Now that you have the 8 Rand 50, that becomes the average price, so which is what we have over here. That simply means when we had the repurchase of shares, we repurchase them at that average price, which is your 8 Rand 50. Do you have your calculator close? Let's punch in. We'll now say 30,000 multiplied by 8 Rand 50. How much do you get? You would then get 255,000. So we come here, it becomes 255,000. Are you still with me? Okay, so we got the average price and we used it on this repurchase. Now we want to know how much we can get up there. So to get that one up there, calculator. All right, let's go. We'll start from the bottom going up. Remember the bottom up. You switch the signs. All right, so we're saying, punch in your calculator, 7,395,000, 7,395,000. Then you say plus 255,000, plus 255,000 minus 6,400,000, minus 6,400,000. How much do you get on your calculator? Thank you. Someone is saying, I have 1,250,000. I have 1,250,000. So we can get this one. There were several ways in which you could do it. You could have said that same 1,250,000 that you have in a calculator, you divide it by 12 Rand 50. Do you see that? You divide it by 12 Rand 50, and then you would get 100,000 here. Or you could have said 870,000. Am I too fast? Okay, I'm going to slow down. Or you could have said 870,000 plus 30,000. That gives you what now? 900,000 minus 800,000. How much does it give you? The 100,000. So the note number 7 is sorted. Let's come here now. We want to see the proceeds from issue of shares. When we sold shares, how much did we get? Then we can quickly say, how many shares did we sell? We sold 100,000 shares. And at what price did we sell them at? 12 Rand 50. How much did we get? 1,250,000. Are we still together? Okay, that's easy. Proceeds from issue of shares is cash inflow. Cash inflow. Let's come to the repurchase of shares. When we repurchase shares, we know that we want this amount here. But we understand that we have paid an amount that is above the average price by 36,000. But what was the average price? The average price that we paid is this one here, the 255,000. So we paid an average price of 255. But whatever we paid here is 36,000 above 255,000. Can I say it again? We have paid 36,000 above 255,000. That simply means whatever we paid is the average price, 255,000, plus, because we paid above, plus the 36,000. That would then give us, how much do you get? In your calculators, 255 plus 36. That will give you 291,000. 291,000. And that is in brackets. I still there? Okay, let's go on to the last aspect. The last aspect is now going to be on the loan. Okay, so remember we have these ones already. We have these ones already. Now, when we look at our loan, at the beginning of the year, our loan was 930,000. But the loan is now increased. You're right. How much is it now? 1,100,000. I want to ask you a question. What do you think happened when the loan has increased? Did we pay or did we receive? You're right. We have received some money. That's why you see the loan is increased. So an increase in loan, we'll now say, now we have 1,100,000. Yet at the beginning, we had 930,000. That means our loan has increased by how much? It has increased by 170,000. What is that going to be? Cash inflow or cash outflow? It is an inflow because our loan is increasing. We are receiving more money. But if the loan was decreasing, that means we are paying back the loan. Cash outflow. If the loan was decreasing, it would have been a cash outflow. Now, I know you have your calculators. Let's close this part now. Where do we start? Let's start with 1,250,000. All right? Make sure you clean everything from your calculator. Let's start. Punch in 1,250,000 minus 291,000 plus 170,000. How much does your calculator say? Thank you. 1,129,000. 1,129,000. That becomes the cash flow from financing activities. Once we have the cash flow from financing activities, now we can come and complete the entire cash flow statement now. All right? Do you remember where we started from? We started with cash flow from operating activities. We did the investing activities. Now we have done the financing activities where we have 1,129,000. So now we need to get the net change in cash and cash equivalents. To get that, please grab your calculator. You will now say 797,900, remember it's a positive figure, minus 415,000 plus 1,129,000. That is how you get your net change in cash and cash equivalents. Now, before we go for the short break of 5 minutes, I want to quickly show you how they asked the part of the net change in cash and cash equivalents in the Eastern Cape paper for the year 2023. Do you want me to do that before we go for the short break? Okay, let's quickly see how they did their net change in cash and cash equivalents in the Eastern Cape prelim paper for the year 2023. This is how they did in the Eastern Cape. They brought in 2022 cash and cash equivalents, then they had a bank overdraft. Are you following? And then in 2023, they only had cash and cash equivalents. So we now want to see how would we calculate the net change in cash and cash equivalents. Remember, there is two ways in which you could have done this. The first way was to simply do as what we did, whereby you add your cash effects from operating plus cash effects from investing plus cash effects from financing, and then you get your net change in cash and cash equivalents. That is from the top of the cash flow statement to the net change in cash and cash equivalents. Guess what? We've just done that with the Limpopo prelim paper. Now, we want to see if you are given this extract alone, what would you do? So, you start with the cash and cash equivalents at the beginning, which is your 2022. This is your beginning. Now, you have cash and cash equivalents of how much? 6,500. So that means you need to open your bracket. You come here, then you say 6,500. Then you have bank overdraft here. Bank overdraft is a minus in this case. So you then come and say minus. Minus what? 38,400. There's nothing more. Okay, let's punch in the calculator. You are saying 6,500 minus 38,400. How much does your calculator give you? Remember, the sign is very important. How much do you get? Thank you. Someone says, Mr. Simbi, I get 31,900. That is a negative 31.9. You're getting a negative 31,900. And then, do we have cash and cash equivalents at the end of the year? That is now in 2023. This is the end of the year. How much was your cash and cash equivalents? It was 56,600. Do you see that one there? Now, we want to get this net change in cash and cash equivalents. So we are starting from the bottom, going up. I know. What do? You swap the signs of this second figure here. So, have your calculator. Let's begin. You will now say 56,600. The 31.9 is a minus, so if we were to switch the sign, it becomes a plus. So on your calculator, you're now saying 56.6 plus 31,900. How much do you then get? You get a positive 88,500. Thank you. You get a positive 88.5. You should be able to prove it now from the top going down. And you're not switching any signs. Okay, let's punch the 88.5 in our calculators. Then we say minus 31.9. How much do we get? Then we get 56,600. This is how they asked it in the Eastern Cape prelim paper. Okay, so that at the end of the day, we have our net change in cash and cash equivalents. Okay, we're going to take a 5-minute break, and after that we're going to look at our own Gauteng prelim paper, and we're going to do some interesting financial indicators calculations. Okay, so see you in 5 minutes. Welcome back, dear learners. Before the ad break, we were able to do the note to the cash flow statement, and we also did an interesting cash flow statement. So far we have touched the Free State prelim, we have touched the Limpopo prelim, as well as the Eastern Cape. Now we are having our own Gauteng prelim paper, and we're going to look at some interesting calculations that are on financial indicators. Now, to begin with, it says Ranga Limited. The information below was taken from the accounting records of Ranga Limited. The financial year ends on 28 February 2023. Required 2.2.4. Calculate the percentage net profit before tax on sales, and we're going to do all those calculations. So let's begin with the first one. So remember again, you need to have somewhere to write. You need to have a calculator. I think you've seen so far with what we've been doing for the past questions that you need to be able to write together with me. Okay, so if you're ready, here is the answer book. Here we are required to calculate the percentage net profit before tax on sales. So this is easy. The percentage net profit before tax on sales. But here we're given the net profit after tax. This is what we're given, the net profit after tax. But we need to calculate net profit before tax. So that simply means we have to come and take our net profit after tax, which is 836,360. Then we add, what are we going to add in this case? Yes, you are right. We're going to add the income tax of 358,440. So we add these two amounts. And how much do we then get? We end up with 1,194,800. What is this then? This becomes our net profit before tax. So I can come here now, and I know that what I want is to have my 1,194,800. I divide this by what? Remember, net profit before tax on sales. So I divide this by my sales, which is 8,240,000. Then I say multiply by 100 over 1. So I'm going to repeat again. It is 1,194,800. And how did I get this? I added these two amounts. So I would encourage you that all calculations must be shown on the answer book. And I want to encourage you that your answer must be shown in this final answer column. So let's have your calculators now. 1,194,800 divided by 8,240,000. How much do you then get? Thank you. Someone is saying I have 14.5%. 14.5%. That becomes our answer there. Let's go on to the next calculation. The next calculation is the current ratio. Okay, so this is easy. What is the formula for the current ratio? Anyone? Okay, I see someone is already responding. The formula for the current ratio, it is your current assets as to your current liabilities. Remember, in the question paper, the formula sheet will be provided. However, it won't be saying the current ratio is. So you just have the formula part, that is the calculation part, the part that simply says current assets to current liabilities, but the name will not be there. I always encourage you guys, do not over rely or do not over depend on this formula sheet, but you should know your formulas offhand, that whenever they say what is the current ratio, already in your mind you know it is my current assets as to my current liabilities. Are you ready? Let's go. So I'm coming here to say, what is my current assets? Remember, we're calculating for the year 2023. How much is my current assets? 1,430,000. So I'm coming here, it's going to be 1,430,000. As to what? My current liabilities. So it is as to, how much is my current liabilities? 650,000. Do you see that one there? So I'm coming here to say as to 650,000. Remember that your answer has to be as to 1. It has to be as to 1 here, as to 1. So for me to get the 1, that means I'm going to divide my current liabilities by 650,000. So I'm saying 650 divided by 650, that is how I get the 1. You with me? And then I'm going to come now to my current assets. So my current assets, I'm going to divide it again by the same 650,000. Okay, how much do you see on your calculator? You are saying 1,430,000 divided by 650,000. How much do you get? Thank you. Someone is saying I have 2.2, so it becomes 2.2 as to 1. This is easy. I know you can do this. But what you need, regular practice, continuously do this. And remember that your answer must be in this answer section here. All right, I want to encourage you. Remember what we're saying in 2023, no blank spaces. We are writing and we're going to write the right and correct things. Can I move on to the next question? Okay, thank you. The next question is now saying, what are we to calculate here? Calculate the dividend per share. The dividend per share. Okay. So when we calculate our dividend per share, we understand that in most cases, you are just given your ordinary share dividends and then you divide it by the number of shares. So in this question, there were several ways in which you could have done it. I'm going to try and exploit these 2 ways, and then we're going to come again and look at how it was tested again in the Limpopo prelim paper. So in this paper, you could have taken, the option A could have been that you could have taken your total dividends, which is 490,000 here. Okay, so if you were taken your 490,000 and you divide it by the number of shares that we are having at the end of the year. All right, but it is very important to understand what they said here in this bullet number 2, that a final dividend was declared to all shares, all right, including the shares repurchased. So shares at the end on 28 February were 3.2 million. Okay, so this is after the repurchase of 300,000. So to know how many shares they were before the repurchase, it would be your 3.2 million, which is after the repurchase, plus the shares that were repurchased, which is the 300,000. So before the repurchase, it was 3,500,000 shares that we were having. That is what we declared the interim as well as the final dividend on. So if you come here and take the 490,000, which is your total dividends. Remember, total dividends include interim and final. Total dividends include interim plus final. So if you take the 490,000, you divide it by the 3.5 million shares. It would give you, I want you to punch that in your calculators quickly, take 490,000 divided by 3.5 million. How much do you get? Okay, thank you. Someone is saying I get 14 cents. So that therefore becomes your dividends per share. But in this question, we were given already the interim dividend of what? Of 5 cents. We're given the interim dividend of 5 cents. So that means if I have my interim dividend of 5 cents, I must get the final dividend. And to get the final dividend, I now take my shareholders for dividends, which is how much now? Which is 315,000, my shareholders for dividends. So I'll then say my shareholders for dividends, which is 315,000. I divide it by the number of shares that were there when we declared. But in this question, we are told that even the shares repurchased will get. So that simply means I'll take the shares that were there at the end when we're declaring the final dividends. But the shares repurchased will also get the final dividend. Hence, we come back again to the 3.2 plus the 300, which gives us the 3.5. So I'll say 315,000 divided again by the 3.5 million shares. And this will give you how much? If you punch it in your calculator, you're saying 315,000 divided by the 3.5 million. Okay, you get 9. I hear someone saying 9 cents. So you come here, then you say plus 9 cents. So it is your 5 cents interim plus your 9 cents final. That will give you 14 cents, which is the same as what we had got over there. 14 cents becomes your dividends per share. But towards the end of today's class, I want to show you how they tested this in the Limpopo prelim, whereby there's a change in the number of shares. I'm going to show you when we get there. All right, so please stay tuned. I'm going to show you how to do the same calculation when there is a change in the number of shares. It could be an issue or a repurchase. In this case, in our Gauteng prelim paper, remember that we still use the same 3.5 million shares. Very important. Okay, so let's come here now. And we are now calculating the next indicator, which is the percentage returns on shareholders' equity. The percentage return on shareholders' equity. All right. So once we are talking about return, we know we are talking about the net profit after tax. So I'm going to have my net profit after tax, which is my 836,360. And it is return on shareholders' equity. So I need my average shareholders' equity. To get average shareholders' equity, I'm simply saying the opening equity, which is 10,312,350, plus the closing amount, which is 13,941,500. I add these two amounts and I divide by 2 because I need average. Remember that. And then remember, what do we want? We want a percentage. A percentage. So I have to multiply by 100/1. That is very important. If it's a ratio, it has to be S2. Remember to show it that way. If it's a percentage, it must be shown as a percentage. If it is cents, you have to show that it's 14 cents. All right? Then let's do it that way. And therefore, if you punch this, someone would have solved this bottom part, whereby they would end up with 836,360. Then they would have divided by the average of 10 million and the 13 million, which is still going to be your 12,126,925. Remember, you're still multiplying it by 100/1. How much do we then get after we have done either or? So we could have done that one, or someone would have done the calculation, then they get that average amount already. So someone is saying, Mr. Simbi, I get 6.9%. Okay, 6.9%. That becomes the percentage return on shareholders' equity. Okay, so remember what I promised you earlier on when we were doing the DPS, that I was going to look at how it was tested as well in a different paper. Let's quickly now look at the Limpopo prelim. This is going to be the last activity for today. In this paper, I also tweaked it a bit so that I can just express what I wanted to show you guys. Okay, so I changed this question a bit just so I can try to do this calculation to the point that you can understand if it comes in a different way. In this paper, we are also calculating the dividends per share. So if we're calculating the dividends per share, there is our answer book. We are told interim dividends were paid on 30 September. Dates are very important. So that means I need to get my interim here. But on 1 March, which is the beginning, we had 800,000 shares. Are you still following me? And then we were told that an additional shares were issued at 12.50 per share. Remember, we've done this question before. And we found that there were shares that were issued, and we are able to get these shares even now, whereby we can say 870 plus 30 minus 800. So the shares that were issued were 100,000 shares. Does this ring a bell? You remember now. So at the beginning we had 800,000 shares, then we issued 100,000 shares. That means by 30 June, we had 900,000 shares. Then we repurchased on 1 January 30,000, and then at the end we end up with 870. Do we agree there so far? Okay. Then we are told that interim dividends were paid on 30 September. The next one. Dividends paid as per the cash flow statement on 28 February amounted to 277,300. So dividends that are paid on the cash flow, remember we did this earlier on, that if we are getting dividends paid, it includes two amounts. What are those two amounts? Dividends paid is equal to last year's final plus this year's interim. So we are told that the dividends paid are 277,300. Remember I told you earlier on this one was given. So would come here then is 277,300. But we have last year's final. How much was last year's final? It was 115,300. Therefore, we can get this as interim. How do we get this as interim? 277,300 minus 115,300. Therefore, this as interim would give us 162,000. Are you still following? Okay, so we got this as interim, which is 162,000. So to get the dividend per share for the interim that was declared for the interim, we would then say the total dividends that were paid, which is 162,000, we divided by the number of shares. How many shares were we having when we paid an interim dividend on 30 September? By 30 September, we were having 800 plus 100. How much is that? We're having 900,000 shares. So we come here, then we'd say 162,000 divided by 900,000. Quickly now, in your calculator, 162,000 divided by 900,000. How much do you get? Thank you. We gave 18 cents per share on the interim dividends. 18 cents. So I can come in and say my interim was 18 cents per share. Can I move on to the next one? On the final dividends, how much was the final? There it is, 191,400. So for the final, it is 191,400 that was declared. But how many shares were we having to declare the final dividend? We want to know this part now. They say a final dividend was declared on 28 February. A final dividend was declared on 28 February. How many shares were we having on 28 February? Remember, we repurchased these shares on 1 January, and we are not told that the shares repurchased will get. So we will now use our 870,000. That simply means when we declared the final dividend of 191,400, we had 870,000 shares on hand. So we divide this by 870. Okay, let's come here. How much is it going to be? Do you have your calculators? Let's go. 191,400 divided by 870,000. How much do you see on your calculator? Thank you. You get 22 cents. I hear someone is saying 22 cents. Is that correct? Okay, thank you. So for your final, it is 22 cents. So what was the dividend per share that was declared this year? We now say the interim plus the final, the 18 plus the 22, that gives you 40 cents per share. As I said earlier on, I tweaked this question a bit. I just wanted to show you, in the event that the number of shares changes, I think if you check on your formula sheet right at the bottom, it tells you that when the number of shares changes, you must use the average method. So this is the average method, whereby we calculate the interim dividends on a particular number of shares. Then we calculate the final dividends on a particular number of shares. Then we add this interim plus the final to get the total dividends per share. Very important that you look for such questions and you continuously practice on such questions. Dear learners, we've come to the end of today's class. Remember, it is only a number of days before we write our paper 1. Our paper 1 is on the 16th of November. Do not be fooled. It is not far. It is as close as yesterday. So if it is that way, what do you need to do? You need to practice over and over again. Whatever you practice, you become good at it. Whatever you look after, it will be nurtured well. If you put hours into your work, I promise you, when results come, you'll be smiling all the way to the school. Remember, no blank spaces are going to be left this year. We are going to write as much as possible, but above all, writing the correct things. On the 15th of November, we're going to be having the last class before the paper 1 is written. So that class is going to be at 2 p.m. I want to make a date with you. Make sure you prepare that you can connect for that class as we do the last push before we go write the paper 1 on the 16th of November. So what I'm asking from you is practice. Remember, this is it. We're not going to try to give it a second shot. We're just going to do it once and we do it well. So make sure you practice over and over again and make sure to go and ask your teacher whenever you need help because they are there to assist you. Dear learners, until we meet again for the next class, from now on, it is practice all the way. Make sure you do a question at least per day so that when the exam comes, you will do well. Until next time, it is goodbye.